Have you watched Amazon stock struggle since July? The stock dumped more than 17% before hitting bottom around $1,700 per share. It could have been worse for shareholders, but the $1,700 level seems to be the support, and the stock has trended up to the current level of just above $1,800 per share. So, with today being Black Friday, has the correction for Amazon come to an end? Let's take a look. We're into the holiday season, and with optimism about a potential trade deal with China, Amazon stock has begun to trade higher. If a deal is done, that will likely positively impact profit margins for Amazon. Regardless, if the trade war escalated, Amazon had time to adjust and find new suppliers. This combination of potential tailwinds appears to be giving investors the courage to open new positions so they don't miss a fourth quarter that's expected to post healthy sales. Looking back to December of 2018, the stock fell more than 1,200 points, highlighting slowdown fears driven by the deteriorating relationship between China and the United States. The bounce off of the 2018 lows brought Amazon stock near its all-time high in July of 2019. Since then, the stock has retraced about 50% of that upward move. In the past few months, the stock seems to have built a foundation around $1,750 per share and seems to have good support. Although the technicals show well, the upcoming announcement of a trade deal success or failure will likely be a defining factor. And in the short term, with Trump signing the bill in support of the Hong Kong protesters, we may see some volatility. So let's take a look at our charts and see what they indicate. But keep this in mind. As you will see, Amazon has a formation somewhat similar, not exact, but somewhat similar to Alibaba and Facebook, both of which I recently covered. The point is, when you find multiple stocks showing similar formations, and those companies are not necessarily in the same corporate category or direct competitors, then you may have potentially found confirmation of a coming trend and the possibility of making good profits. So let's take a look at our charts. So we're now looking at a 3-year weekly chart on Amazon. I think that this time frame shows it the best for you. In Amazon.com, the symbol is AMZN. For disclosure purposes, I do not hold any shares of Amazon at this time, but as previously disclosed, I do hold shares of Facebook. And if you saw the Facebook video as well as the Alibaba video, I talked about that cup and handle, and here it is. Here's this previous high here, and then here's the recent high in July that it couldn't breach the previous high. But here's the cup, more or less. It's not exact, LKZ. And then you come up here, and then the handle down here. It's not perfect, but I'm not looking for a cup and handle. I'm looking for my formations. And this is what shows up well in my formations. And we discussed with both Alibaba and Facebook, which is here. We have the MAC at that point there. And this also shows the cup and handle, that being the cup and this being the handle. Now, you had two buy points, again, both with Alibaba and with Facebook, right here at this point. That was a buy point. Now, we're getting a second chance here. The fast line is just barely under the zero line, but it's right at the slow line, the red line, the slow line. So the black line, the fast line, is about to pop through that slow line, which means up and away. Generally, it's not 100%, but it typically is a pretty good indicator of what's going to happen. And that, my formation, compared with the cup and handle, gives you a little bit more confidence in there. Now, looking at the histogram, we can see too, nice basing and move on up to that zero line. Same thing here with the price rate of change, relative strength, which is popped above that 50 line, the stochastics, volume looks fine, and then the Williams. Williams is almost into that overbought territory, and that's going to be the leading indicator or leading oscillator. Back up here to the price chart. Again, looking back at Facebook and Alibaba, here with Amazon, are very similar formations. So when you find confirmation of companies that are in different corporate categories and not necessarily direct competitors, then you may have something. So there are never any guarantees. And as usual, you want to conduct your fundamental analysis. But in my opinion, this is a very interesting formation setting up for good profits. Now, if you follow the typical cup and handle, you're going to want to wait for the price to move on up here, and that's your trigger point right there. So just barely above that 2,000 per share or $2,000 per share figure. In my formations, we've already had two buy points. Again, right here where the fast line crossed through the slow line, and then we're just approaching another buy point right there. So pick your methodology. Mine, I like to stick with because it works. But if you like IBD's cup and handle, look at that. But again, follow the fundamentals. Make sure that they meet your criteria. And for today, that's ChewDog Charts. Thank you.